Well, welcome everyone. We'll let everyone join in here. We've got several people coming in, so I want to personally welcome each of you. I'm Chad Frantzen with WealthBuilders Investments. We're really glad you're here, and a lot's going on in the market, in the economy here, first week of March, so excited to do this webinar with everyone. I want to give just a minute for everyone to join. We're just a couple minutes after the hour. So thank you so much on behalf of Billy Epperhart, myself, and WealthBuilders Investments. We're really glad you're here. And I want to give you a little bit of instructions here while we're getting more folks here in the room. I've got everyone on mute, so please keep yourself muted. And then we do have a chat room going here. So if you're familiar with Zoom, you've got a little chat icon at the bottom kind of center of your screen. You can click on the chat box and it'll pull up the chat bar on probably on the screen left. And we've got some of our team members in there, Julie and Mercedes. And so they'll be communicating with you. Please feel free to enter your questions there. Even if you have some questions on the economy, the markets, feel free to go ahead and put them in there now. I'm going to share some overall thoughts, and then I definitely want this to be interactive. And if there are specific questions you have about financial planning, about the markets, we want to make sure we get to those today. So again, hi, Ben. Thanks for being here. Yeah, so feel free to open up the chat. We've got a few more people coming in here, and we'll get started. So thanks again for being here. Well, this is great. We've got a good group, so I'm going to go ahead and get started. We've got a few more people joining, just as a reminder, I've got you muted, so please stay in mute mode and open your chat box at the bottom of the Zoom. There's a little chat icon. Click that, and then it'll pull up the chat bar on the left-hand side. And we'd love to hear from you. Love to have you just type in the chat box where you're zooming in from. What state or what country. We've got a lot of international people even within the Wealth Builders Network. So send us a chat text right now. Just tell us what state you're in or country if you're outside the U.S. So we're really glad you're here. Well, I'm going to go ahead and kind of get started here. We're Wealth Builders Investments. Again, our goal and mission is really to empower you all in the way of kingdom investing and making sense of making money for making a difference. So we know that's really important to each of you. And that's really the purpose of this monthly webinar that we're doing on the first Thursday of every month is kind of our goal there. Or actually, I guess it's second Thursday, excuse me. But we're getting in a rhythm with that. So be on the lookout in your email about those events. And again, please feel free to chat. Let us know kind of where you're calling in from. I see Colorado and Texas and Illinois. Got someone from over the pond in UK. Hello, Adam. That's awesome. That's great. We've got Delaware, South Carolina. So always good to see where people are calling in from. So blessings to everyone. And we're going to go ahead and get started. One of the things, I'm going to share my screen and show you some slides here in a minute. You know, one of the things, if you followed Billy Epperhart for any period of time, you know, he likes to show charts, likes to give you a perspective, kind of a 30,000 foot view of what's going on in the, we call it the macroeconomic world, but what's going on out there in the economy and how that impacts each of us as citizens, as taxpayers, whether we're in the US or the UK or really anywhere around the world. A lot of my comments today will focus on what's happening in the US as far as the stock market, real estate, bond market, things like that. But certainly global economies are very interconnected. So when we think about how to invest our dollars, you know, it all kind of feeds in together for that. So I'm going to go ahead and share my screen. Again, as you have questions, please feel free to put those in the chat, and we'll get to as many of those as we can today. Let me just get this slideshow here started, and we'll get rolling. So again, many of you kind of know our contact points, but if you're looking to find Wealth Builders Investments, you can find us at wealthbuilders.net. That's really the best way to get a hold of us is just through the website, wealthbuilders.net. And I'm going to share with you a few newer things that some of you may not know of what we're doing as well, of how you can follow us on that. So, right, we got more people coming in, so let me let some more folks in here. This is great. So, and then, this is our legal disclosure. We are a registered investment advisor. So again, this program really for educational purposes. If you have specific questions, we'd be more than happy to visit with you one-on-one, but just encourage you to understand that. So, well, let's get rolling. One of the things that we talk a lot about at Wealth Builders Investments is we really want, and I think each of you on this webinar today share a similar passion of we want to make a difference, and this is the way we say it. We want to make a global difference by stewarding wealth that maximizes its impact and its influence for the kingdom of God. Amen. So that's really the heart behind what we're doing. And if you don't mind muting yourself, I think I had everyone on mute, but I appreciate it. And so what we're going to talk about today is a little bit more. I just want to hit some of this because some of you are not as familiar with what we do in the world of investing and biblically responsible investing on that. So there's really three main pillars or filters for investing. We call it biblically responsible, pro-values, and social or kingdom impact on that. So these are the three pillars for investing. Again, we talk a lot about this in our conferences and webinars on that. I'm not going to go too in depth on this today, but biblically responsible, pro-values, and social impact. So if you're wanting to know how to take your personal financial portfolio, your investments, and really have a kingdom perspective, this is what we walk folks through, really the three tiers of investing. So again, just want to mention that not the topic for the presentation today. And then Fran, if you don't mind muting yourself, I'd appreciate it. Thank you, sir, or ma'am, sorry. And feel free to put your questions in the chat. One thing we have that's newer, just in the last month or so, is the Kingdom Finance Show. So really want to encourage you to check this out. We're putting out a new episode every week. This is really our attempt to just stay relevant with content in the world, in economics and the financial markets. And you can find Kingdom Finance Show on Spotify, Apple Podcast, YouTube, the usual suspects on that. And then there's actually a QR code on that slide. You can even, if you want, before I advance the slide, you can take a picture of that with your phone or tablet, and you can check that out. So that's new. I think we launched that last month. So that's a great way to stay in touch with us in addition to these webinars, the Kingdom Finance Show. Well, let's dive into some thoughts on just the economy, what's going on in the markets. And some of you may have heard me at the Wealth Builders Conference in Denver that Billy and Becky Epperhart hosted. We had a great turnout for that. I think we had well over 400 people attending that in person, and then we had quite a few on live stream. So thank you so much if you came to that. Well, we hope it really blessed you. I did share in one of my workshops this slide, a lot going on in the economy with big companies, big Fortune 500 companies, many of the banks, many of the tech companies starting to lay off a lot of their workforce. So oftentimes CEOs, when they're looking down the road a little bit, they're navigating these huge multi-billion-dollar global companies. They have to really forecast budgets. They have to forecast their employees, how many they need, the labor force. So we're already seeing here in the first quarter of 2023, a lot of big companies laying off people, from the likes of Google and Microsoft to many of the banks as well. So what that tells us is the job market is going to start tightening. It's actually fairly hot right now, which is part of the reason why we have elevated levels of inflation. But this is more of a forward-looking indicator that the big CEOs of these major global companies, that they are, they're nervous about what the economy is going to look like, how soft of a landing things will be with interest rates going up. Now, I want to share a couple of stats for you, and I'll try not to bore you too much with these statistics, but these were some stats I shared at the Wealth Builders Conference last month. We got these stats as of February 14th. I'm going to show you the other slide here, which is through today, but I'm going to put these numbers up and just so we kind of have an idea. Now, whether you invest in the stock market, whether you buy real estate, gold and silver or not, it's important to just know where things are in the economy. Certainly, all of us, you drive vehicles. If you're not driving purely electric, then you're buying gas, and so even the price of oil, that's important to know. Many of you who are homeowners or real estate investors, you're aware of what's going on with interest rates and mortgage rates and things of that nature. So a couple observations I want to make here. You can kind of see gold is around $18.64 an ounce, and silver is a little under $22. Now, mortgage rates, you can kind of see where those are for the 30-year mortgage and the 15-year mortgage. One of the big harbingers for the economy is what we call the S&P 500, which I have here. And so on February 14th, the market, as we're going to call it, stock market, was 41.34. And the 6-month bond was 5%. So I'm gonna flip ahead to this other chart, and I want to show you what has happened just in the last 3 weeks. Okay, so stock market is down. It was down quite a bit today. Heading into this webinar, it's down around 3,900. And bonds, now remember that 6-month bond that I just told you about from 3 weeks ago was at 5%. It has already gone up about 1/4 percentage point, which may not sound like a lot, but it is. It's a pretty strong move in bonds over a pretty short period of time on that. So again, and I'll talk a little bit more about that in a minute on what we think. Mortgage rates overall are still trending about where they were 3 weeks ago. Again, depending on where you are in the U.S., you're going to find different mortgage rates in different states on that. But these are for the most part national averages. Most of the mortgage specialists I've talked to have communicated to me that there are what we call really wide spreads right now in mortgages. So if you are looking to buy a home for personal use or investments, what you're going to find is that the spreads are really wide. And so this is just an important facet to understand, is that the mortgage rates will change potentially every day, right? Sometimes multiple times during the day. So when the spreads are wide, it means that one bank might quote a mortgage at 6%, and another bank might quote it at 6.25%. So the spreads are wide, which means the rates that are being quoted are moving around quite a bit. And I'll come back to that in a minute as to why we believe that's happening. Again, gold and silver are actually a little lower than where they were 3 weeks ago. My personal opinion on gold and silver, I think they're it's a really good asset class to have just for preservation of capital. I do think personally, Chad thinks that once interest rates level out, once the Federal Reserve stops this march towards higher rates, I do think hard assets, particularly things like gold and silver and real estate as well, will start back up in an uptrend. But until that happens, I think gold and silver prices will stay in a fairly consolidated range. I'm on that. Bitcoins continue to be really volatile. Again, if you're looking at crypto and digital, we do think that technology is the wave of the future, but it is very volatile. And we encourage folks, if you're gonna invest in that, you want to have a 5-year time horizon. If you're going to invest in Bitcoin or Ethereum or some of the others, that's certainly going to be a theme for the next decade, is this concept of decentralized finance. And oil prices are a little lower. They were about $79 last month. Although for some reason, every time I go to fill up my truck, gas prices don't go down. So that's kind of where we are. I do think I'm going to show you a chart right behind this. So keep in mind this number on stocks and this number on bonds, if you're taking notes at home. This is a chart that Billy Epperhart and I both really like. It's called the Buffett factor or the Buffett indicator. Warren Buffett, founder of Berkshire Hathaway in Omaha, Nebraska, one of the most esteemed investors of our time. This is an indicator he uses to look at when the stock market is overbought or oversold. And so how many of you have ever thought, hey, I don't want to overpay for a house. I don't want to overpay for a stock or a mutual fund when I'm investing. Well, this is a chart that Buffett uses. And again, this is all public information. If you want to find some of this data, you can go to this website. It's just a research website. We're not affiliated with it, currentmarketvaluation.com. If you want to geek out on some of the economic stats that are out there. But in effect, let me just explain this chart briefly here. What's happening is this gray line here is the historical trend line. Okay. And so you'll see that the stock market in this ratio, you'll see how high the stock market is up there at the top, right? And so you also see there's been periods of time when stocks were closer to the trend line, this section in here. So the closer it is to the trend line, to the middle, the more, I'm going to call it, fairly valued the stock market is. The higher it gets up here in the orange and the red, that means it is becoming pretty expensive. The price you're paying for stocks is higher. It's elevated more than historical averages. Now, the converse is true as well. If you get stock prices down here, we saw, this little section here would be the 2008, 2010 financial crisis. When it gets down here to these green lines, again, green means go. So those are opportunities for buying. Those are times when you, figuratively speaking, would want to back the truck up. If you're investing in the stock market, again, you want to invest based on your time horizon and your risk tolerance, of course. But these are opportunities where values are really good. And so I do think, as a lot of other friends of mine, mentors in the business, we do feel like this concept, I'm going to call it financial gravity. Okay. So financial gravity just says, hey, what goes up must come down. And so I do think stock market and the real estate market as well, that this is going to move closer down to the trend line here. Now you'll see this little black line here where it almost hit the trend line. That was COVID. So there was some really good buying opportunities coming out of COVID when the whole world shut down. But we do think that, that's going to be more and more prominent to look for. So again, I'm going to talk about interest rates here in a minute, but I wanted to share this chart just so we kind of know the markets have come down some, right, from the peak of euphoria last year. But still, I think if we could see it down here, I think that puts the S&P 500 around 3,300 to 3,500. Again, today it was at 3,900, I believe, is where it closed at. So, all right. Well, I'm going to move ahead on that slide. Here's a slide I showed last month at the conference. I won't spend too much time here, but if you're investing in real estate, this is what mortgage rates have done, right? And so you'll see really the end of last year, heading into the first of this year, 2023, we saw stocks, mortgage rates go up significantly, right? They got well north of 7%. They've since come down. They're still pretty volatile, but I know many of you know that just from being active in the real estate market. Now, this is a new chart I would like to show. This is one from a group I follow, and one of the things that is really neat about this chart is it is giving us a little perspective on what we call the range. And so this is the U.S. government bonds. Okay, so U.S. government bond, this is the 10-year bond for the U.S. Treasury. This is a really good harbinger for the economy, for interest rates, for mortgage rates. I mean, if you're going to look at one thing, this would be right up there, in the top 2 or 3 things you're going to look at. So what you'll see, this was from Housing Wire, which provides really good economic commentary on the housing market and interest rates. What you'll see here is that these black lines, this is where we feel, and I agree with this assessment, that the 10-year U.S. government Treasury is going to be in this range. So somewhere as low as 3.5%, you can kind of see a pattern here, right? You see where it has support. Right. And then same way at the top end, you'll see some resistance. It's gotten up 4%, but it didn't stay there that long because really mortgage rates got so high that it really stifled, mortgage applications and new construction. So somewhere in this range, if you're watching the 10-year bond, if you have a finance app on your phone, this would be a good one to watch. We really see those kind of in that range, somewhere between 3.5 and just under 4% on that. Now, if you remember, it was right around 3.9 today from the chart earlier. Now, if the 10-year bond can find more range down here in this 3.5, 3.6 range, then that means we'll see mortgage rates hopefully soften up a little bit, kind of find a base. If they keep going up high, and particularly if it breaks above this, I don't know that it will, but I think this is a pretty good range for us to watch. Then mortgage rates would take off more before that. So I know that was a little technical, so thanks for staying with me on that. But again, want to give you some perspective on that. I think if you're looking to get a mortgage on a home or investment property, just knowing where the 10-year bond is, sometimes you don't have much say because you find a house you want to get and the numbers make sense and you need to go ahead and do it. But this is a good perspective on mortgage rates for you. All right, a couple things I want to cover here is, if you've heard me recently, you've heard me speak about the Federal Reserve Bank, Jerome Powell and the Board of Governors. They are currently right now the most powerful people in the world, arguably because they control monetary policy, and monetary policy just controls the supply of money to the economy. So whether you're a stay-at-home mom, a retiree, an entrepreneur, whether you're a teacher, knowing what's happening with interest rates, it does have an effect on what you're paying at the pump, what you're paying at the grocery store and restaurants, and certainly when it comes to your investments, it has a big deal. These are all the different dates that the Federal Reserve will meet this year. And you'll see here they did raise rates February 1st. They do have a meeting coming up March 22nd, May, June. So the prevailing thought is that the interest rates will continue to rise, mainly because the job market is still really strong. In fact, it's fairly hot, and inflation is still really high. The government believes inflation has peaked. We've talked about separately making a case for double dip inflation, which we do think is feasible based on history. Either way, whether it's peaked or not, inflation is going to be really stubborn. We think it's going to be with us for the foreseeable future. Most periods of higher inflation can last, 2, 3, 4, 5 years. In this day and age, we're in the instant gratification world. We kind of want things to be, figured out, sooner than later. I don't know that that's going to be the case. So when we're talking about managing money, we're talking about investing, we want to take a longer view on this. We want to have some cash protected. We want to be looking for opportunities. We don't want to feel like, oh man, I gotta get back in there, or that you have to take all your money out and do nothing. I do think it's likely we get into 23 a little further into July, August, September. I've highlighted these dates here. I do think we could see potentially a change in the outlook from the Fed, where they may start to pivot or hold on interest rates. And so that's kind of what I'm looking for personally. Is I do think we'll see some rate increases in March and May and probably June. Of course, everything's based on the job market and how the economy is functioning. But keep your eyes open for into the summer, early fall, and there could be some news coming out where there are some investment opportunities. But we'll stay tuned on that front. And the main reason why we really believe interest rates are going to keep going up is a few weeks ago, actually during our Wealth Builders conference, the government report on inflation came out. It was actually that Friday of the conference, and it's called CPI. It comes out once a month, and it came out higher than what the government had expected. Now, we had been saying, if you've been following us in our webinars, we had been saying for several months now that we don't think inflation's going away. We think it could actually creep back up higher. We all know that the governments of the world, they use data for their own political gain and benefit. So again, this came out, and so what's happened, if you remember at the very beginning, I showed you a chart about how the stock market had gone down since February and bond yields had gone up. And it's really one of the primary reasons is this report that came out that said, hey, the economy's still hot and inflation is actually a little higher than what we had expected it to be on that. So the government has publicly stated, the Federal Reserve, that they want interest rates to keep going up until they can tame inflation back to the 2% range. And you don't need much more than about a fifth grade education to know that 6 or 7 is a pretty big number compared to 2. So it is going to take a lot of effort to get inflation back to 2.5%. That's the stated goal. So again, we want to tie all this in as investors. Okay, Chad, that's some great data on the economic outlook. I'm going to finish with some action items, and then we'll get into the chat with your questions. So please, if you have some questions, put those in the chat, and we're going to save some time here at the end, and we'll go through those. So the main thinking here with inflation being higher is that interest rates are going to have to go up more, and the stock market is not going to be super comfortable when there is uncertainty around, oh my goodness, how much will the Federal Reserve have to raise rates? So that is a lot of why stock market's down, 2, 3%, 4% since early February. And it's also why interest rates are going up. Now, I want to talk a little bit here on, I want to summarize this and then give you some action items. Again, we want to share these monthly updates just so you know what's going on in the markets and the economy, and also just reinforce what we think some of the action items you should be praying about, talking to your advisors about. And again, if you have any specific questions on this, our team will be happy to visit with you one-on-one So, feel free to reach out to us afterwards. Now, let me just summarize. Let me get a few slides up here, these bullet points. This is our current thesis for the economic outlook. We do think more rate hikes, right? I showed you the chart of the months the government officials will be meeting, and you can see what's going on there. The second one, I didn't mention this in my comments earlier, but interest rate hikes take about 9 months to fully work the effect of them through the economy. So think of a wave at the ocean. When you see a wave, after it crests, it still has, energy that works its way until it hits on the beach. Same way with monetary policy, even though it's weird economics. It's just the financial gravity of it. So again, some of these interest rate hikes from last fall of 2022 are not fully into the economy until probably the next few months. Again, we still contend there's a strong possibility for double dip inflation. Either way, I think inflation is going to stay higher for longer, which means I do think the stock market is poised for a pretty big correction this year. I think we'll see companies continue to do layoffs, potentially downgrades on their stock. And so it would not surprise me, again, my personal opinion, would not surprise me to see the stock market as a whole have a 15 to 20% correction this year. Again, that would probably be healthy long term. But again, as an investor, what we don't want to do, which is what a lot of traditional Wall Street firms do, is we don't just want to be a buy and hold, or should I say buy and hope investor. We want to be strategic. We want to be hands-on with, should I be in stocks or bonds or gold? To what percentage should I be in those? And I don't personally believe, just from having been in financial industry for 20 plus years, that just putting it in mutual funds and hoping it works out, I don't think that is the best strategy. I know a lot of people that do them. I do think having a little bit more strategic thought process on, when to be in the markets and to what level, I think is going to help protect your money, one, but also help you get better returns. Real estate, obviously very localized. We've got a lot of people on the call and in our network that are active in the real estate market. And, there's still deals to be made. I think the key factor here is inventory and interest rates. And so I think if the numbers are working, I think, those are good opportunities. You want to be patient. We do like to see 6 to 9 months of inventory where you are, for it to be truly a buyer's market more than a seller's market. And with interest rates on mortgages being higher, that is preventing some first-time home buyers from being in the market to buy real estate. It's not so much affecting investors if they're well funded from that, but keep an eye on that. Keep an eye on your inventory. Well, let me summarize here, and then we're going to jump into some questions. If there was one thing to take away from where we see the economy right now, it would be this theme of stagflation and recession. And so stagflation, if I just summarized everything I said, or if you jumped on late, what I would say is we expect interest rates and inflation to continue to be high, interest rates going higher, and we expect that the economy will slow down in its growth. And so that is the definition of stagflation. So if you didn't know that, you learned a new word today. So stagflation means the economy is growing very slowly. It's not contracting. It's not negative. It's growing neutral to very slowly, but we have raising interest rates and inflation. So that is stagflation. Now, the flip side of that is that if the economy, if we have a major geopolitical event, or if consumer sentiment shifts, on a dime, which it is known to do, then the theme would move from stagflation to a formal recession. So if you've been reading about that, again, These aren't things to be fearful of. These create actually investment opportunities. So that's one of the things we do at Wealth Builders Investments is we work with families, create a plan, create a long-term strategy, and then just based on what's going on in the economy, it will kind of show us where are the opportunities to invest and when is the right time to invest on them. All right, let me put a few just financial checklist items up. This will be my last slide. And I did share these recently. So if you've seen them, hopefully you're doing a little homework there. So again, several items here. If you were to say, hey, Chad, what are some key financial planning takeaways for me today? Honestly, if I jumped on a one-on-one phone call with each of you, this is what I would be talking about. Again, it's obviously very personal, but number one, with inflation being what it is, we want to encourage you to create a prudent cash management strategy. So I can't tell you the number of times I talk to somebody every week, maybe a handful, and how little interest they're earning on their money at the bank or the credit union. Now, one of the things, so we can help you with that, is to go out and help find higher rates for that. You want to keep a good amount of cash liquid. So if you're thinking about investing, waiting for opportunities, but you want that cash to be working for you. We don't just want to sit it at a bank and have it earning 1%, 2%, or 3%. With interest rates where they are, we need to be earning more on that. So number two is just having a strategy for diversifying your money while also protecting it. Number three, I talked about this at the beginning. We're obviously very passionate about pro values and biblically responsible ethics when it comes to investing. So if you've never taken an assessment of your brokerage accounts, your IRA accounts on, hey, are my investments supporting things that I don't believe in, that my faith can't support? That's always a good idea, just to take an inventory and say, hey, I think I want to do some rebalancing, and let's start with getting companies out of your portfolio that are really anti-Christian. We'd call them woke companies that are just liberal beyond liberal, right? A couple of the things on here, obviously tax planning. That's something we want you to have a good tax strategy. So talk to your CPA. We can help you with that as well. If you've read any of Billy's books or conferences, we talk a lot about passive income. So I want to encourage you, no matter where you are, what age or stage, I want to encourage you to have 1 to 2 streams of passive income that you're learning about, you're getting educated about, or you're actually investing in. So again, we all have to start somewhere. So even if you're beginning, I just want you to start learning about that. And creating your overall personal financial plan, defining a farm team, that's something we do at WBI. So just kind of putting together an overall strategy of, okay, I have a 401k here, I have some real estate here, I have some gold. We talk to a lot of people who they've done some investing, they have some things here and there, but they're not really clear, much like a jigsaw puzzle. They're not really clear how the pieces fit together, if that makes sense. So I want to encourage you, really pray through, talk through with your family. Okay, how is what we're doing, how does it all kind of come together, if you will? Certainly something we can help you with at WBI. And then farm team, we have this concept in the world of investing about farm team. And so whether you are investing in real estate, whether you're investing in stocks, dividend paying funds, even just having a short list of some things, types of assets that you want to buy, that if the market went south, that instead of being fearful, you would actually be being like, oh, that's down 10%. Maybe I want to invest some, looking for opportunities when others may be more fearful. I call that developing a farm team. So it's kind of a good way to think about it. All right. Well, let me share one more slide, and then we're going to jump straight into the Q&A. We released at the Wealth Builders Conference a new teaching product that Billy Epperhart and I created called Investment Mastery. It's based on the XXX teaching that he does. And so he and I both have teaching modules in this. And no matter where you are, I know we've got folks from all over the US and in Europe on the call today. Whether you are more at the 1X starting out, looking to gain financial freedom, whether you're more at the 2X, you've got some financial favor and prosperity going, or you're at what we call the 3X. You're really operating at a kingdom impact level and wanting to do more. You're thinking legacy. You're thinking next generation. We created a teaching product. There's about 8 classes on each of these. So it's several hours of teaching, and love to tell you more about that. So reach out to us if you would like to learn more about that product. And I think we may even have a link in the chat that we can put up for that. But that's brand new. Those are going to be being released into this month, early April. And we're going to honor the conference price for a little while longer for that, just to give a discount to folks in our community. So if you're looking for, hey, what do I need now to learn? We want to get this in your hands. We've been working on this product for quite a while. We had some delays. We were trying to get the last bit of teaching in there. So this is one I think you're going to love. All right. Well, let's jump into some chats. And I know my team's been looking at the board here to kind of see. So let me just give me a second here. We've got some questions here. We got a lot of questions. Wow. Okay. Well, that's awesome. Oh, okay. All right. Let me get my bearings here. Feel free to put your questions in there. We've got 10, 15 minutes, so I'll cover as many of these as I can. So Fran in Illinois was asking if we use mutual life insurance, paid up additions as a type of investing. Yes, great question. Life insurance it's a very good tool. Think of these type of things as tools in the tool belt. Cash value life insurance does have a role, I think, a place at the table in overall financial planning. There's different types. There's this type Fran's talking about, which is more of a mutual life insurance paid up addition. I think that's probably whole life, but there's indexed and whole life, universal life policies. We do like those. As part of your overall plan. It's a good way to grow tax-free wealth. It's a good way to leverage your money long-term based on the tax code. So yeah, love those. Esther was asking, you're going to sell the house this month or maybe in the next couple of months on there. Would it be okay to downsize and put my profits in some kind of asset? Absolutely. We have a lot of people, if they sold their house kind of at the top of the market, or if they're selling, maybe going to be in a period of transition. And what I would do personally is I would set up like a cash investment account, and I would put it into some type of short-term fixed income, whether it's a short-term CD, we can help you with that, or you can work with someone there in your local market. But I think right now on a 4, 5, 6 month CD, you can get about 5%, and it's federally insured on that. So not a bad idea. Let's see. Talking about, let's see, Philip, you had a question about 401k monies. This is a good question just for anyone that's investing in your retirement accounts. My personal opinion would be, even if you are younger, if you're in your 20s, 30s, 40s, and you're in a 401k retirement account, given where the markets are, I personally would, if I were managing it, I would move some of that money into stable value, which was Philip's question. And stable value for everyone, that just means if you've got $1,000 in your 401k plan, you're gonna move half of it out of stocks into money market, cash, stable value type of investment. I think that's probably a good idea. Again, I don't know your specific age or situation, but I think having some money in your retirement accounts, right? We're talking IRAs, 401ks, having some of that money in a stable value for part of this year, most of this year, I think makes sense. I wouldn't do all of it, but I think it wouldn't hurt to have a good chunk in there. Depending on your risk tolerance, for sure. But I do like that idea. Good. What would be a good short-term investment in this time? So short-term, usually I define short-term, either less than 12 months or more than 12 months. So I think if you're 12 months or less, what we're doing at Wealth Builders Investments, which, happy to help you, feel free to reach out, or you can go do it yourself, is we're doing federally insured bank CDs, and then some government bonds. And so we're able to go out and shop all across the country. And I would keep it short. The sweet spot right now is somewhere between 4 to 6 months. You're actually not earning that much more interest right now if you go out to 12 months, just based on where interest rates are. But that'd be a sweet spot. I'd probably do 4 to 6 month range, federally insured bank CDs or government bonds. If you have more questions on that, anyone, if that resonates, feel free to reach out to me directly, and we can help you with that. Well, let's do a couple more questions. We've got a lot of them coming in. I appreciate everyone's participation here. A lot of questions on cash management, so I appreciate that. I think I've covered that. Again, I think what you're going to find is most of your banks, most of them, they're not going to be quick to increase the money market rates or the CD rates on that. So go and take a look and see what you're earning on your cash or your savings. And if it's not 4%, then I would recommend, evaluating a change. One of the things we do at Wealth Builders Investments is we can kind of go out and kind of canvas all the different investment world and find things that are going to be higher interest paying. So even if you have a personal bank account, now I'm going to recommend that, and Billy and I both feel strongly about this, I'm going to recommend that you not work with the big national banks, the big woke banks. I'm really going to encourage you to consider not doing that. I've had to move my stuff. I know it's hard to move bank accounts, but for your personal savings and checking, I would suggest finding a local bank or credit union that you can develop a personal relationship with for your checking, your savings. Even some of you that are business owners, real estate investors, they're going to be able to help with even some of those lending needs. Now, when you get beyond, kind of a certain amount of cash, I think we have some people who may have excess cash reserves at their local bank. If you get above a certain level and they're not paying you more than 4%, then I'm going to encourage you, reach out to us, or if you have another source to because you can earn higher rates of interest on that. Let's see. Let me look here again. We've got a few more questions here. Feel free to ping in any more questions if you have. I'm going to look through the chat here. What is protected cash? Good question, Marcia. So protected cash just means that it is insured. And so it's either insured by the FDIC or it's insured by the SIPC. Those are just two government funded agencies. Again, I get some questions from people who say, you think, the banks are going to take all our money. Are we going to go all digital? I don't personally see that happening. I do think it is a good idea to make sure, particularly for those of you who have large amounts of cash at one bank, to diversify to different banks. And that's something that we do at WBI. But that's in essence what protected cash is. We're saying money markets, bank CDs, things of that nature. What we're not saying mutual funds. We're not saying stocks, and we're not saying bond funds and things like that. All right, good question here. And Julie and Mercedes, I'll have you all put this in the chat. But Philip was asking, how do I set up a personal one-on-one to create my own future investment strategy. So we'll have the team put in the chat, and then we'll also, after this webinar, you'll get an email from us with a link, and it's a scheduling link, and you can click on the scheduling link in your email. And then if we're able to get up in the chat, you can check that out. But you will get an email after this, and it will enable you to schedule a 20-minute consult with myself or someone on our team. And that way we can better understand your needs. So, and we love to do that. If that's something you're really thinking about, please check your email after the webinar, and we'll get you all that link. Yeah, Leanna, I do prefer smaller banks to Wells Fargo's of the world. We have a Pro Values Index. Some of you may have seen it, but almost all of the big banks, Bank of America, Goldman Sachs, JP Morgan Chase, Wells Fargo, they're all on the list. Some of the things they're doing are really not even legal, with they reserve the right to close your account if they don't believe in things that you're charitably giving to. I would definitely advocate for going small and regional on that. Let's see, Chris Carter was asking, will WBI be expanding to offer tax services? So we do not currently operate as a CPA. However, we do have a lot of good CPAs in our network. And so if any of you are saying, hey, I need a good CPA, personally, I don't think your CPA has to live in your town. They do need to be familiar with your state tax law. So feel free to email us, info@wealthbuilders.net, if you need a referral for a CPA. We've got a pretty good network for that. Now, what we do offer through WBI, we do offer tax planning. So as a certified financial planner and all of our advisors on our team, we do offer financial planning. So let me just explain this for a minute. When you do comprehensive financial planning, you're actually looking at a lot more than just stocks and bonds. You're looking at retirement, college, life insurance, estate planning, disability insurance. You're looking at charitable giving. And so you're certainly looking at tax and legal on that. So one of the things we do for some of our investors that are more at that second X, third X level is we do some particular tax planning with their investment dollars where they can reduce their income tax. And oftentimes we're educating their CPA on how to do that. So yeah, if you have specific questions on that, feel free to reach out to us. Again, you'll be getting an email with our scheduling link. Feel free to also email us, info@wealthbuilders.net. And then of course you can contact us through the website, wealthbuilders.net. I see Gary Reese here. Hey, Gary, thanks for joining. Let's see, Gary's got a good question. Yeah, the one-on-ones, we are going to send that link out. So this is a good question. We talk, some of you may be newer to Billy Epphart's teaching and Wealth Builders. Some of you may have been around longer than me on that. We have this concept called triple X. So 1X, 2X, 3X. So the way I would explain it, now we can show you with numbers, but sometimes even just explaining it in words is better. If you are more, I'm kind of starting out, I'm trying to get a budget, I'm trying to really increase my income, pay off my debts, I'd like to buy my first home, maybe I need to get some life insurance, that's going to be more your 1X. Okay, you may not have a lot of money to invest, and the primary thing you want to do is invest in yourself. You may have some money to invest, but that's not the primary goal. The second X is someone where you've had some jobs, you've been able to save some money, you've got a little bit in the bank, you've done a pretty good job of paying off debt, you're a little bit more financially literate, you've taken some courses, you're kind of understanding some things on that, but you're still looking to grow your wealth, you want to do a little bit more planning. And the key to the second X is you're creating passive income that is approaching to be equal to or greater than your expenses, right? So I'll do a separate teaching maybe next month on the triple X, but that's the secret sauce is instead of working a 9-to-5 job, which we're not saying to quit your job, but if you have passive income from your assets, that if they're paying you monthly dividends, rents, royalties, things like that, then the goal in the second X is to start building your passive income. Now, once you get up really high on the passive income chart, you're getting over to the third X land where you can actually start giving away most of your passive income on that. So great question. Again, we can talk more about that in any of the one-on-one consults. Any recommendations? Let me just see if I can grab one or two more questions, and we're gonna wrap up just out of respect for everyone's time. Any recommendations on non-woke insurance companies for auto and home? Man, that's a good one. I know Aflac's really good, although they don't necessarily operate in that space. I think State Farm is pretty good. We probably need to do a little more research on that. I'd actually be curious. Gary's on the call. Gary, I know you've got experience in that. You might, if you have an insurance company you recommend, feel free to enter it in the chat. I think what I would say on that is I work with a local broker who's a Christian, and I go to him to talk about, hey, what companies are you quoting? And they're really a good source for that. So, well, this has been great. Hey, I really appreciate everyone being on here. Again, if you want to learn more about Wealth Builders Investments, you can go to wealthbuilders.net. You can also email us at info@wealthbuilders.net. And then you will be getting an email for those of you, since you registered here, we'll send out an email with a scheduling link. So if you want to schedule a 20-minute consult with our team just to talk about your personal investment strategy, we'd really love to visit with you. So, hey, this has been wonderful. Thank you all again. I see some familiar names on here. So Donna, thanks for being here, and many others. So God bless you and keep you. And we appreciate each of you. And we will look forward to see you next time. We do these every month. So watch your email for more information, as well as the scheduling link. So on behalf of Wealth Builders Investments, I'm Chad Frantzen. Thank you for being here, and God bless.